And you can hear me loud and clear. Can you type 777 on the chat box so we can start up for today? Now, after you type 777, type on the chat box the pair that you want us to analyze. Okay, only Ibrahim can hear me. The Bible says out of 2 or 3 witnesses. So, thank you all of you. So good. Now I want you to type on the chat box the pair that you actually want us to analyze this night using that wonderful strategy that. Okay, 777, everyone can hear me. Now this is gold. I'm going to close this. Type on the chat box the pair you want me to analyze. Step index, we're going to do step index. V7, we're going to do V75. But let's focus on the Forex space for now. So USD card. Okay, what else? Let me change this to USD card. After the currency, after the Forex pairs, we'll go to indices, okay? Go to synthetic. Gold, GBP, USD, okay? V5 and V75. All right, beautiful. Now, you can see the beauty about using the rectangle strategy. That's a Queen of Pips strategy in 15 minutes. You can just draw these lines and trade like that without analyzing anything because the market will keep going from one pivot level to another pivot level. Now I'm going to delete this. I'll delete this and I'm going to draw. This is one we did last time. But if price closes below, wait for another confirmation, confirm to sell. After the net connection is unstable, if you can still hear me, please say yes, you can hear me. Let me delete this. If you can still hear me, please say yes. Because I'm getting a signal that my internet is unstable. Okay, good. Thank you. All right. Let's start from here. Now, everyone, for those who, I know some people typed in the chat box, in the chat room, that I should do a recap on the Queen of Pips strategy. That's a QOPFX strategy. You know, the QOPFX strategy is just a modification of the rectangle strategy frame. But this one, I modified it that we can use it on the 15 minutes time frame and we'll get the same results, quality results that we're going to get using it on higher time frame. You know, the higher time frame, you have to wait for 2 4-hour candle. That's good 8 hours. But if you go on the lower time frame, those period of waiting for 8 hours, you can use it to catch the number of pips that you want to catch with a very little risk. The most important thing about any strategy is the risk-reward ratio. If the risk is very small and the reward is high, that strategy is beautiful. Now, what are we looking for first when we want to trade this strategy? Sorry, my chat is blinking. Okay, it's to confirm that you can hear me. What are we looking for in this strategy? First, you need to identify any pivot level. Sorry, any impulse move. Now I'm going to pick my trend line. I have to lock it so I can follow I'll follow suits. Now this is an impulse move. This is a correction. Okay, I have to lock this. Beautiful. This is a correction. This is another impulse move. Why is this thing behaving like this? This is another impulse move. This is another impulse move. Okay, I didn't do it well. I'm supposed to lock it here, sorry. This is another impulse move. Now with this strategy, all we need to do is just find an impulse move, and we do what? We go most recent impulse move. Remember, you have to zoom out to the limit where you can't zoom anymore. This is 15 minutes. I'm doing it on a 15-minute time frame, so please pay attention. Now, if you look at this impulse move, you see that this is the low for the day. This is the lowest, and this is what? The most recent high. So we can choose to either use this move or this move, since both of them are on the same level. Look at this. From here to here, this impulse move and this impulse move is still showing that we're on the same what? Just like a double top. So let me delete this. And let's say we're picking this impulse move, this previous impulse move. You know, the thing with this strategy is that you go to the past, and the past will tell you what's going to happen in the future. All right. Unlike before, we would have drawn all the way down like this, but you can just select the most recent impulse move, which is this one that we're seeing here. So now I'll pick my trend line, and I will draw from here up to this place. That's the beginning of the trend line, the beginning of the impulse move, to the what? To the ending of the impulse move. Now, one thing, like someone sent, and I gave an analysis on Bitcoin, that's BTC, that this is where BTC, I'm expecting BTC to get to. And BTC actually got there and even went below that. Somebody said, if you're not using this strategy, it's not going to work for you. And I repeat, I repeated what the person said. I said, it's not about you knowing the strategy. Me that created the strategy, you can see the number of losses I made between Saturday and today. That's in space of less than 48 hours. I lost over $500 because I wasn't disciplined. So even if you know all the strategy and you're not disciplined, you will still be losing in the Forex market. Yes, there's a tendency that I'm going to get it back. But if I'm not disciplined, it's going to repeat itself again. So now I picked my rectangular box. I drew from the beginning of the impulse move to the end of the impulse move. This trend line already demarcated half of the box. Now I'll pick another trend line, which I already did, and go from the tip of the box to the end of the box. Why am I doing this? I'm trying to find a what? A pivot level. Those levels are the levels that price reacts to all the time. Drawing my pivot level, you can see that price is already reacting on it. So to get your pivot level is the intersection between your two trend line, which is this trend line that we're seeing here. You can see there's an intersection. Then I put my horizontal line in between. So my horizontal line is in between this. You know, I can stay in my house and I make so much money. I pity for people that go out every time, go out there to make money. I don't know. I don't have the strength to do that. Forex has made me so lazy that you can make millions of money sitting down in your house. But you need to be disciplined. I don't know why I keep emphasizing on being disciplined about it. So now, this is what the intersection between these two trend lines, and I put my horizontal line there. Now I've divided the rectangular box into two. Okay. Now for me to get more levels, I need to do what? Do the same thing I did on this half. The box is divided into two, the rectangular box. So we now have one up here and one down here. So for me to repeat the same thing, I have to do the same thing I did on the first box. I'll pick my trend line and do like this here. I hope I'm not too fast and hope you guys can understand what I'm saying. Then I pick this, I do the same thing here. Please don't write on my screen, I beg you, delete it, okay? Can you please delete what you wrote on my screen, please? Thank you. Now, I'll pick my horizontal line and I'll do the same thing here. The intersection between the two, and this is another intersection here. You can see how price is reacting to every level. Now, this horizontal line you are seeing here, they are all what? Pivot levels. You can see how price reacted here. Let me remove this cross so you can see it well. You can see how it wicked out, touched it, and did what? Drop down. Don't worry, I'm going to show you how you can enter the charts and exit the charts. It's okay, Delay. So you do the same thing for the lower box. You know, when I launched this strategy, I told you we're going to use it to enter. We can enter on the 5 minutes time frame. But you see, there was so much noise on the 5 minutes time frame. You keep getting so much. Your stop loss will be hitting, even if the risk is very small. But you know, it's always bad when you go to your history and you see so many red. Even when you get a green take profit hit, even if it's much, but that red is always, there's a way there's something it does to your psychology. So I was not studying the 15 minutes time frame, and I saw that the noise is actually lesser and you can achieve same result on the 15 minutes time frame. So beautiful. Now I've drawn my box and I've gotten how many pivot level? 1, 2, 3, 4, 5, 6, 7. So I'm expecting price to either go down 7, break through the 7 pivot level to the bottom, or if it breaks above this and does what? Come above this side, which is the resistance level, all I'm going to do is duplicate this box like this. Hold on. Clone it, and I'll just carry it up this way. If price goes above it, you see, I'll just do this. I'm just showing you for the purpose of this class. If price breaks above the resistance level, all you need to do is do this. Clone the box and do what? Place it on top, then draw the same way you drew it. My chat box is blinking. Let me attend to what. I'm analyzing on the 15 minutes time frame. 15 minutes time frame, yes. Okay, so this is for, okay, before somebody asked a question. Now I've drawn this on my 15 minutes time frame. Now the question is, how can I enter and exit this chart? But before I start telling you how to enter and exit, the first time I taught you guys this strategy, we were using only one moving average, which is 200-day moving average, exponential moving average. But I also saw that the 50 exponential moving average can as well help you to identify the trend where the market is going to. And in case the market is going against you, you still want to buy it, there's a limit on where you can get your TP instead of waiting for it to hit the next pivot level. So this is what I did. The 200 EMA, you can see how price reacted there, and the 50 EMA. Now, what the work of the 50 and the 200 EMA, if price is above the 200 EMA, is telling you that the price is going bullish, that the market is going bullish. But if the price is below the 200 EMA, it tells you that the market is going what? Bearish. So there's a tendency that price can be going bearish, but is now closing above your pivot level and you want to buy. Will I just allow those pips go like that because I'm waiting for what? Price to just go and come back? There's a way you can enter the trade, and the body of the EMAs are going to be your TP. I'm going to show you how to achieve all that. Now, let me reset this chart so it can be bigger. Now, the first entry of this thing is like this. Let me use the current market now. I'm sure everyone can see this. Now, how to enter this trade? The first thing, let me start with this place. If price, oh no, let me don't start with this price. Let me start with here. This particular place. Here. Now, the first thing you should do is you watch this candle that I circled here. You can see this candle I circled here. Before you can enter a buy on this trade to the next pivot level. Remember, you've picked your buy from here, price has gotten to this place and all that. Now, if you want to enter for you to know if this trade is still going to be going my way bullish, what you're going to do is just two things, two confirmation. Wait for the first candle to break the pivot level, which is this one that I circled. This was the candle that broke the pivot level. Then you wait for the second one to actually do what? Close above it. That is, you're going to wait for 30 minutes. First 15 minutes and the other 15 minutes. That's 30 minutes. So as soon as this candle closes, you take your what? Instant execution buy. Your TP is on the next pivot level. But the way I do mine is I enter two positions. You can see my, I don't know if this has hit my take profits. Let me check. Okay, one has gotten to the take profit. It has closed. It's remaining one. One is still running. So what I do is I take two positions. One will go to the first take profit, the other one will go to the next pivot level. So I'm not like, I just wanted to show you that I took two positions in this. Now let me go back to this. So what I do is I take two positions. Remember, instant execution here. My first TP will be this place, this pivot level, and my second TP will be this pivot level. And your stop loss is where? Below the candle that broke the pivot level, which is this. So you can see your risk to reward ratio is very good. But when we did this thing on 5 minutes, we saw that there's so many times that your price could go back and hit your stop loss because of too much consolidation. So I see that since you have three candles, 3 5-minute candle in 1 15-minute candle, the period when the candle is closing and breaking in between the pivot level is still forming on the 15 minutes time frame. So this is actually to remodify what I actually taught the last time. Now, this is where you have to do it. You enter this trade for buy and your TP will be on the next pivot level. Your stop loss is just like I explained, below the candle that broke it. It does the same thing. You do the same thing. Now, why I chose the 50 and the 200 EMA? Remember, I told you the 200 EMA stands as a trend. It shows you the trend of the market. Now, the 50 EMA also shows you the trend of the market. 50 is above the 200 EMA. It still tells me that, yes, the market is on a bullish run. That's why it's not just you it's not just you having an idea about the strategy. You can as well add your structure. You can as well add price action. You can as well add so many things to it to help you tweak it. Yes, you might exit the trade here, but a professional will see that, okay, since this is still going on the uptrend, there's a tendency that, just like what happened here, you see how price reacted on the 50 EMA and kept going up. So this was just a pullback for the price to continue going on an upward direction. On the only occasion that you can exit this trade, let's say, for instance, you pick this trade here and you decided to run it until you notice that there's a pullback. The only reason where you can exit this trade, if you choose not to be using the pivot levels as your take profit, but it's always good to follow the strategy. Strategy is every pivot level is what? Your take profit. But if you want to do like me, two position, the first pivot level take profit, the second pivot level take profit, you can still do it that way. All you need to do, when the first one hits take profit, you just move your stop loss to break even, or you move your stop loss to what? Stop profit. So even if price returns back, you're not losing anything. I'm sure you understand what I just said. If you understand it, please type 555 on the chat box before I go for that, for us to see what's happening on this market now, the present market that we're having now. Type 555 on the chat box so I can tell you what's going to happen in the next. Okay, beautiful. Only one person. I just need 3. All right, good. Now we understand how we can enter this trade. Now, are you seeing all this pivot line that I drew here? Sorry. You can actually use this to enter your trade till God knows when, until it breaks through your first resistance level or your support level. Then you can clone the box like I did and draw more pivot levels. So you don't need to be analyzing all the time. All you need to know when the trend has changed is using the 200 and the 50 EMA strategy. Exponential moving average. Just like what you're seeing now, price has gone beyond the 250 EMA. It closed below it and is about to close what? Underneath the 200. But the 200 is still serving as a support. So for the person who called this trade, you should be on a buy on this pair, USD card. Ask me why. Look at the candle. I need to expand this so you can see. I'm sure everyone can see this now. This bearish candle here, let me change this to arrow. The bearish candle here closed above the pivot level. And this one again closed above the pivot level. So what you're going to do is take an instant execution buy. Your stop loss will be, let me pick another, I will change this color of the stuff. This is where your stop loss will be. I will change this to black. You see where this candle is? This horizontal line is? That is where your stop loss is going to be. 1.26485, and your take profit will be 1.26761. So this trade now, you can take a buy on this trade and let's ride it. So if the trade goes against you, how many pips are you losing? The current market is 1.26562. So you are just losing only what? Less than 9 pips. To gain how many pips? 20 something pips. But if it closes below our pivot level, what are we going to do? Let's say this candle that is forming a bullish candle decide to do what? Close bearish, close below the 200 and close below the pivot level. You wait for the next 15 minutes candle to close. If it closes below it, you sell it to this next place. And your what? Your stop loss will be on the candle that broke the pivot level above it. So this candle, this pair that we're looking at now, we should take a buy on this pair, and your stop loss should not be anything less than 9 pips. Here. This is where stop loss should be 1.26. You can just do 1.26480. So let me type it. I don't understand this new. Okay. Buy USD card. Stop loss. One point two. 1.26. 1.26490. This new updated 1.264. Let's leave it this way, 1.26480. And your take profit should be 1.26760. All right. So this is a trade. We're actually taking this trade now. So you can take a buy on this trade and take it up from here. When price gets to this 50 EMA, it's going to react. It will react as soon as it touches the tip of this 50 EMA, it will react. So there's a tendency that it may not get here to this take profit, but to be on the safe side, put your take profit there and watch it grow. Okay? You know, this is 15 minutes, so you can actually say you're scalping. So this is for this. We're buying USD card now. This is the stop loss and the take profit. So our stop loss is less than 10 pips, and the take profit is about 21 pips, thereabouts. All right, so this is for USD card. If you understand what I just did now, if you take this trade now, if you took the trade now, type on the chat box, type 3 on the chat box. If you took the trade now, type 3 on the chat box. For the person that said I should analyze USD card. Okay, Babatunde, yes. Only one person took the trade. GBP USD, I just finished. Okay, we're analyzing only 3 forex pairs, then 2 indices pairs. Okay. Now this is for USD card. So let's go to GBP USD. We'll do the same thing we did. And we'll see what the market is going to have for us. I love every pair that have the USD, all the major pairs, because they are the one that move. When you see the market moving, you understand that yes, this market is moving. Not the one that moves in a way that is so annoying. Now, what are we identifying? Our impulse move. Okay, our impulse move. Now, let's draw the impulse move we have here. This is an impulse move, correction. This is an impulse move, correction. Impulse move, correction. So we're either expecting something like this. So now, which one are we going to pick? The lowest and the highest point. Now, this is the lowest point here. This one here. And this is the highest point here. This one here. So now that's what we're picking. We're picking this impulse move because it's actually what? Lower than where current price is now. All right. So this is the impulse move we're picking. This one plus this one. If price breaks above below this, we're going to just clone it and continue from what we're doing. So I'm going to delete everything I drew here. Then you pick our trend line. Identify the impulse move just like this. Okay. Pick a rectangular box. The tip here. Up to this place. What are we doing? Identifying our supports first. This is our support zone. And these are resistance zone, which acts also as a pivot level. They act as pivot levels as well. So what are you going to do? You pick your trend line and do the same thing here. The work is just to draw this, but as soon as you finish drawing it, you're done. Identify the intersection, which is the first pivot level. Now this one. You will see how price is reacting to it. Okay, let's focus on the one below because that's where the current market is now. That's where the current market is. It will do the same thing here. Okay. Now what else? Let's just finish it up. Let's finish it up. I'm sure we are on the same page. Okay. Okay, we're done. Then you check your 200 EMA to check where the price is. Remember what I said? If price is, what happens? It shows that the price is going up, bullish. But as soon as the price is below the 200 EMA, it shows that the price is what? Bearish. So from looking at this without analyzing anything, price is going bearish. So imagine you enter this trade from the beginning of this place. Something like this happened. This price closed, this market closed like this, and you did what? This other one closed to confirm your sell. And you place your stop loss above this particular one. Sell, your first TP is hit, your second TP is here. Risk reward ratio, fantastic. Now let's leave what has happened and come to the present to check what's going to happen. Now, from this analysis, it shows that you're supposed to be on a sell now, because this candle broke and closed below it, this particular candle. Let me check. Now, this particular candle closed what? Below our pivot level. This one closed again to confirm it. This was just like a retest. So if you enter the sell now, you are doing yourself good. So GBP USD, for this analysis, we're taking a sell, and the let me start it. So take a sell now on GBP USD. Let me write it. Sell GBP USD. Sell GBP USD. Stop loss. Sell GBP USD at the current market price is what? 98 to current market price. 1.39208. Stop loss. So while I'm doing this, you should be selling it. So just sell while I get the prices. So your stop loss should be this one, 1.39460. Let's just do 460. 1.39460, and your take profits, your TPS 1.38. Let's do 1.38400. All right. So we're already on the sell for GBP USD. So this is what we're doing now. We're selling GBP USD. Stop loss is less than 20 pips again. Okay, 26 pips, right? Or less than that. Then take profit. You can see how much the take profit is. So the risk to reward ratio for this is rewarding. This is where we entered, somewhere around here. This is where this, and so this is, what's the ratio? You can see it here. Ratio is 3:29. 3:29. So you're losing how many pips to get this? This is a very beautiful trade. Very beautiful trade. We're losing 24 pips to get what? 81 pips. 24 to get 81, so which is still good. 24 pips to get what? 81 pips. So that's for GBP USD. If you're not in the trade, you can enter now a sell on GBP USD. So this is what we're expecting price to do. We're selling GBP USD. So if you understood what I did, can you type letter P? Just type P. Let me know. P means profit. So it should be in profit. We'll be in profit, and we hope this goes our way. But even if it doesn't, we're not losing anything. It's a very small. So I'm going to gold. All right. So we've done GBP USD card. We're buying USD card, and we're selling GBP USD. Now the next one is gold. I don't really understand the use of 50 EMA. Okay, the use of 50 EMA is just telling you where price is. Just okay, now let me explain it using this before I move on. You know, the 200 EMA shows us that price is what? Going in, price is below it, which is a downward trend. Now, why you need the 50 EMA is if you enter this trade, let me give an example, just like this one, this particular one you see here. Remember, this trade is telling us that price is selling, is coming down because of where the EMA is showing. Price is below the 200 EMA and the 50 EMA. So it's indicating for us that price is doing what? Still coming down. But if you want to trade against the trend, the 50 EMA will now serve as a what? Your TP. So let's say you decided to take this pair. Now, after this thing has happened, this one closes below this pivot level, and you felt that, okay, another one will close for me to do what? Continue. But this happened. This closed above this, and this closed above this. And you decided to buy this pair. If you are buying this pair, you buy this pair, your TP will just be at the body of your EMA, this 50 EMA. Because you cannot say, okay, let me enter two entry, this one here and this one here. There's a tendency that price may not get here because it's showing you a downward movement. So the 50 EMA is just showing you direction that, okay, if I'm entering this trade, if I'm going against the trend, my TP should be what? On the body of my what? 50 EMA. Or if I want to still enter a sell, let me give you another scenario. If I can see a better scenario. Okay, good. Let me use this buy area. Now let's assume you've been buying this pair from here. Let's just for the sake of this is the 200 EMA shows that price is above what? The 200 EMA. So I'm comfortable to buy. And let's say you've been buying this pair all the way up, and you're still expecting price to maybe go up. You cloned your pair and it's still going up. But unfortunately, price did this. As soon as price closed this candle, let's say this bearish candle, closed below your what? Your 50 EMA. To you, the indication will tell you that I think the bulls are getting tired for the bears to do what? Take over. So for you to do what? Leave the market, and watch how the market goes. Your 50 EMA is just to help you exit your trade or put it as your what? TP if you are going against the trend. Do you understand it? For who asked the question? If you are going against the trend, Kolawole, you understand what I just said now? If I'm going against the trend, that 50 EMA serves as a what? As an indication for me that, okay, this is where my TP is going to be. And the crossing again, if you see where 50 crosses 200, it's more indication that that pair is going towards that direction. Just like the way you see this crossing happen now, 50 cross to the downward side, is telling you that it's time for what? The bears to take over. If 50 cross above, it's telling you that it's time for the bulls to do what? Take over. So it's just to tell us what is happening in the market. All right, good. Now this is GBP USD. So we're expecting price to do what? Come down to our TP. Now the next one is gold before we go to synthetic USD. I already drew this on gold, and price has started reacting. Now this is another pair you should let me see the beauty for Color Wallet that asks the question. If I'm going to buy this pair, you see what happened here? Price came here and it's not breaking this pivot level. Let's say I want to buy this pair. My TP will be at the tip of this 50 EMA. So now you can buy gold. Your stop loss will be, I just drew this, or let me draw it again for the benefit of those who just came in. But you can buy gold. Your stop loss will be 70.20. That's 30 pips away from here. And your TP will be what? 70.33. That's 100 pips. So buy gold now. While I delete this and draw it again, just buy gold now. Stop loss 70.20. Take profit 70.33. So buy gold now. Okay. Please write it down, because by the time I'm done with drawing gold, I will need it so I can paste it. Okay. I hope you are buying the gold. Now, the first thing that we're looking for, the most recent impulse move. Impulse move. This is an impulse move. Correction, another impulse move. Now, what are we working with? The last low, the lowest one, which is this, and this is the most recent high here. This is another high. But because price has not broken this, we are going to use this particular impulse move, this one here, where price is working, right? So I'm going to delete this while we work with this impulse move. Now you pick your trend line, identify our what? Pick your rectangle and do what? Draw this. What else? Identify your support zone, which will be in profit now. Little profit, maybe like between less than 10 pips on gold. Okay, we've identified it. It may not be accurate when drawing your, trying to identify your pivot levels. Okay, in between this here, we do the same thing for the half. Okay, what are we doing? All right, let's do the same thing for here, and we'll see how price is going to react. Now for Color Wallet that asked the use of 50 EMA, I'm going to show you the use of 50 EMA for this particular trade. Okay, my 200 and my 50. Let me reset this. Now you can see that in all indication, price is below the 250 EMA. So it's still telling us that the sellers are still leading. But can we allow all these pips go like this? What if this trade wants to start going bullish? Am I going to wait till it breaks above this pivot level, closes above it before I can enter my trade? Now the question is, I can still enter this trade and be very careful and manage my risks. That is when, like, as I call this trade a buy, our TP, first TP will be here, 1733, then second TP will be 1742. In case it breaks it and decides to go up. But our first TP will be at the tip of the 50 EMA. That's why I call this a buy trade. Now you can see that you're trading against the trend but for the strategy, you are on point. Price is above your pivot level. All the prices you are seeing here closed above your pivot level. So if I said, okay, let me take this trade, what are you risking? We're risking just 30 pips to gain what? 100 pips and more than 100 pips. Again, this is about 200 pips. So if you lose 30 pips to gain 100 pips and 200 pips, that's not a bad trade. So for gold, buy gold now at current market price, 17220, 223. Stop loss 17220. TP1 1733. TP2 1742. So this is the analysis for gold. We're losing 30 pips to get 100 and 200 pips. So are we good? And let's move to synthetic. If we can move to synthetic, type yes on the chat box so I can go to indices. Okay, good. We have three. Kola Wale, do you understand why I use the 50 EMA now? Is Kola Wale still on the call? Because it's always good to ask questions in case. Have you seen the use of the 50 EMA? Okay, good. Now you can see this is a live chat, a live trade going on. So it's better for you to understand. You know, now we're against the trend because market what? The price is below 250. But how we be sure that, okay, price don't want to reverse now. So it's better to take the risk, but your TP should be what? On the 50 EMA and the other one at the pivot level where it's supposed to be. Then you watch it grow like that. So we have three trades going on. USD card buy. USD card buy. This is still consolidating. GBP USD sell. This is still the market price. And gold buy. All right, so that's it for this. Now let's go to indices. If you can see this type, you know, it's very difficult. Excuse me, very difficult to type to draw the rectangle on this MT5 because it's not friendly. You have to take it one after the other. So first, if you can see my MT5, please say yes. I need to delete all this. Okay, so this is beautiful. This is, let me delete. I have to delete this to draw it again. Now 15 minutes, I minimize it. Now you can see this is even good because we can identify what? See this impulse move here, impulse move correction, impulse move correction, impulse move correction, small correction to impulse move, this, another impulse move. Now, what can we do to do what? This is the lowest here, and this is the recent high. Price has not broken this. It's even looking more like a head and shoulder. Look at the left shoulder, the head, the right shoulder. It broke it, came to retest it. They most likely that it can go down or it will continue doing what's going up. We never can tell. Let me secure a pretty $1 eclipse. And let me use this particular one. You know, before the one I used when you guys were, the one I just deleted is the impulse move from here up to this place. But now let me use this small one here, so you can tell me what I can do. This is the recent low, and this is the recent high. So I'll pick my trend line and do this. Come to insert. No, this is different too. Come to objects, go to shapes and rectangle. And you do what? You drag it. So I've gotten it. Then you come here, horizontal line. Do the same thing, horizontal line. Pick your trend line. If you double click on the trend line, if you keep it like this, if you click on delete, if I click on delete on my laptop now, you see it will delete because that box is at the tip, ensuring that it's highlighted. So you need to be careful. If not, you delete everything that you're working on. As far as you're having this box at the tip of your trend line or your box or anything, it shows that it's still highlighted. So if you click on delete, it will delete everything. So you need to be careful. So if you double click on it, it goes off. So you know that, yes, even if I click on delete, nothing will go off. Now pick my horizontal line and do the same thing. Okay. So I've identified my half of the rectangular box and the other one. And we'll do the same thing here. Don't worry, even if it's not accurate, it's not at the tip of the rectangle, it's not necessarily at the tip. So what I'm going to do is pick my horizontal line too. You see why it's always good to pick the recent high and the recent low. Even if it's a small impulse move, you can go in of the market and out. Remember, this is indices. It moves very fast. So I've identified that. You can see how price, you know, I use this bigger move, impulse move. Now you can see why price came here and returned back, because there's a pivot level here. Now I use the smaller impulse move. You see why price reacted to that thing and came back down. So it's always good to look for the smallest impulse move. Or you can still use this big impulse move, but before you go to your take profit, you might be seeing that price will be going back and forth. Now I understood why price backed out from here, because there's a what pivot level here. So price did what? Came back, tested this one, and is now going back up. So instead of going for the larger picture, just look for the small, but it has to be an impulse move, not a correction. Then you draw your rectangle from there. All right, so this one is not as friendly as a trading view. Okay, now you can see I've drawn my box and all that. You see how price is reacting to every level. You see how price is reacting to it. So I'm going to insert my 50 EMA, go to indicators, insert, indicators, you come to trend, and you go to moving averages. 200 EMA, exponential, make sure it's exponential white, and click on OK. So this is indication that price is doing what? Going up. Okay. You can see the indication that price is doing what? On an upward movement. So even if you want to sell this, let's say something like this happen, you see that price is already, you can see how price is, this for Color Wale now that asked that question. You can see how price came down here. To you now, this is still a downward trend. But imagine all the, if you are waiting for price to come and be above your 200 before you can indicate yourself, you have missed all this move. So let me add 50 EMA again and see what 50 EMA is doing. Indicators, trend, moving averages. 50 EMA, we'll change its color to yellow. Okay. Now you can see 1, 2. So if I choose to buy this pair, my first TP on the body of the EMA, my second TP here, I'm still good. And you can see how price is still reacting to it. If I still want to buy this pair, even if it's under my 200 EMA, telling me that there's a sale coming up, for the fact that price came here, bounced off on the, just like this now, you know, the pair, the strategy says this bearish candle closes and this one closes below this. Instead of you to do what? Pick a sell, it's going to hit your take profit, it's going to hit your stop loss. So you will know that this 50 EMA now is not acting as a support. Price did what? The first one closed above it. This second one closed above it. So it's an indication that for you that, okay, I think I need to sell this pair. I need to buy this pair, this in the what's called step index. You buy it to the next level. Even something like this happens, because anytime it gets to a 200 EMA, it must surely react. Something of this nature happens. Why you can say it will hit your stop loss is this particular one. This candle closed below this 50 EMA, closed below the pivot level, and this one closed what? Below. If you enter a sell here and put your stop loss above this, price will do or hit your stop loss, which is still okay. It's not, there's no strategy that's 100%. You must surely meet where it's going to hit your stop loss. So by the time this thing happens, it will give you more indication that, okay, I'm buying it. Then the crossing again, 50 crossed here, is good for me to do what? Buy. Now look at what's happening to this pair now. If you notice before, my previous TP was somewhere here because it's on the pivot level of the higher what? Higher impulse move that I use. But when I divided it and made it a little bit easy, you can see that there's a pivot level somewhere here and price is reacting to it. See now, it's going to hit my stop profits. Most likely it may hit my stop profits. But you know, I remember one has already closed in profit. Let's check it. It's not showing me, it's only showing me volatility. I don't know why it's not showing me step index. But maybe I'm not good with all this. I'll ask Mr. Femi to help me to see what the reason why the thing is behaving like that. So look at how it's happening. So we'll see how price is going to react. Now for the same entry, what we did in the Forex is the same thing we're doing here in the crypto. So I said crypto in synthetic, which is indices. If you want to buy or sell this pair, you just need the same thing, the same analysis. You wait for the first candle to do what? Close above your pivot level. Wait for the second one to close two above the pivot level. Then you pick your what? You sell. You pick your what? You sell. Now, if you're picking a sell like this, you know my TP will be on this pivot level, which is good. it also came to this 50 EMA and it was bounced off. So if you are selling against the trend, showing that this is going upward, because everything is indicating there's an upward movement, but you decide to take this sell, you don't have to stay too long on the sell. If you're taking two positions, you're not putting first one here, putting second one here. No. All your TP should just end up on this, your pivot level, or on the body of your 50 moving average, because it's indicating that the market is still going up. So from here now, it's showing me that this market is still going up. The only thing that will make me to take a sell on this trade is if this candle, present candle now, we can see now, this is 15 minutes. So in the next 2 minutes, this candle is going to close. Then the next minute, another 15 minutes, I wait for the other candle to do what? Close. If it closes below the pivot level, then I'm taking the sell. I'll take the sell, or I may just leave it and wait for it to close below my 50 moving average to give me more room and confidence that, okay, I think this thing actually wants to sell for now. But if not, if it's not selling, if it closes above this and the next 15 minutes candle close above it, I'll see enter another buy. My stop loss will be this little one here. My TP will be here. That's how I will keep going and keep going like that. Now, where I'm supposed to put this TP is the intersection between this. You know, I thought intersection the last time. Every intersection, every crossing, just like this crossing you see here, 50 to 200, is an area of consolidation for price. See this crossing here? If you go to the past, you will see that markets actually reacted there. Let me show you. You see this crossing here? You can see how it's a zone. Market is reacting to that place. This is a crossing here. You can see market is reacting to that crossing. See it here. This is a crossing. Market reacted there. If you come to the future, you see that market is reacting to that crossing. So there's a tendency that this will hit here on the tip of this crossing and do what? Reverses back. So instead of me putting my TP on the next pivot level, I prefer to put it here and let price does. Okay, now this is a new candle forming. This one has closed. Let's see. You have to wait. Now this closes above our pivot level, right? So before you can enter buy on this trade, you have to wait for this 15 minutes candle to close, which is 10:45. If you close above the pivot level, then you buy it to this next pivot level. And your TP, your stop loss will just be on the wick here. This week. Let me use the cross. So if this candle closes above this pivot level, enter a buy. Your stop loss will be here. That's 96.90. Then your take profit to be what? 9700. I'm sure we understood this. So we'll not enter this trade now until this particular candle. We're not going to enter a buy on this trade until this particular candle closes above the pivot level. But if it closes below the pivot level, we'll wait for another 15 minutes to take our decision. So there's no entry here. If you do not enter from all this while, do not enter now. Wait for this one to close before you take your decision. V, this guy, he dealt with me, so I just decided to divorce him. But this is a buy trade here. You know that this one, if you miss the buy here, which is this particular place, this candle here broke the pivot level. This one closed above it. If you already took the buy from here, you're in good shape. So your stop loss is somewhere here. Let me go to 50. I prefer using 5 minutes on this volatility. You know, the volatility money. Okay, let's come to 15 minutes. Let's use 15 minutes. Now, this is where you're supposed to have entered this trade. This is the candle that broke the pivot level. This is the candle that closed above. So your stop loss will be where? Here. 686,162. And your take profit to be here. So if you want to buy this trade now, you cannot put your stop loss here. Your stop loss will be here. So this is a risky trade because there's a tendency that it might go out. But from the look of things that we're seeing here, this trade pair is going to buy. So let me use the small, let me buy it here. But I use a very small lot size. Because I don't like this boy. I've divorced him. So I'm buying this pair. You can see how much he wants to take from me now. $4.97. My take profits $11. So let's see how it goes. I use the smallest word. So if it goes against me, it hits me, I'll lose $4. But if that I took it from here, this is where my TP is. Let me draw it so you will see. If that I took it exactly at this close of this candle, my TP, my stop loss would have been here, this place. But if I put it there, I'm losing $10. So the risk is too much. $10 to gain how much? $11. That's not a good trade. So just to risk it, because I've missed that entry, I'll put it here. I'll use $4 to gain what? 11. So that's for, so I can see I'm buying volatility 75. Then step index is even losing more. You can see it's coming down. So it's showing more, it's not showing us indications for buy. So if you took this buy now, you already been lost. So you have to wait till 10:45 for this candle to close. If you close above it, then you can buy. But for now, there's no buying here. Showing the buy, but you have to wait. Just be on the safe side is to wait. So let's see what's happening. Volatility 75. Okay, it's still going in our favor. And we'll see how it goes. I would have taken 2 positions on this. My first TP will be here, and my second TP will be here. But let me just leave it this way. Any question? Because I'm done. Let's check what's happening now. Forex part. Okay. So, boom, our TP, our stop loss has been hit here. Because our stop loss is somewhere here. So this candle took us out. So we need to wait for another confirmation to know what to do. Stop loss hit. So we have to wait. This candle closed below the pivot level, but this one is going up. So we need to wait and see what's going to happen before we take this trade. So here, wait. GBP USD is still within our entry price. Gold has given us little 10, less than 10 pips or so. And let's see what happens. Volatility is still dancing. Step index is giving us hope to go up. So any question? Sorry, 10:30, that's when we're going to enter this trade. You know, it's 15 minutes. So we have 9 more minutes to check to enter step index. 9 more minutes, not 10:45. See, my volatility is already going in loss now. But watch it. So at 10:30, we will take our decision on step index, if we're going to buy it or leave it. So any question, type on the chat box. Yes, K2, you can do that, but you're going to have so many pivot levels. You can as well do that. That's what I taught in the last class. Rectangle in a rectangle. That's a bigger rectangle, then you can now do a smaller rectangle in it. You can do that as well. You can. Any other question? You know, we're waiting for, I wanted to stop sharing, but I want us to see how this is going to take shape. My volatility is coming down. So you can see I'm in loss in volatility. There's so many noise, you can see it here. Market is just the volatility. I don't know. When I started trading volatility, if it's going up, it's going up. If it's coming down, it's coming down. But this period, I don't understand it again. It's making so the shakara is just too much. That's why I just divorced it and I went for step index. In the next 7 minutes now, we'll take our decision on step index to buy. Any other question? In previous chat, you said we should draw our rectangle in 30 minutes time frame and take on 5 minutes. But I noticed you drew on 15 minutes. Is it okay to draw on 15 minutes? Daily, that means you're not paying attention. Yes, I said you can draw it on 15 minutes or 30 minutes, then take on 5 minutes. But what I said when I started this class, I said that the noise on 5 minutes is actually so much. So many people's stop loss, even my own, we always hit, even if it's a very little stop loss, but it's always hitting and hitting and hitting. So what is the solution to this? I have to study the 15 minutes time frame. So the period, there are 3 5 minutes candle in 1 15 minutes candle. So while I'm waiting for all these candles to go up and come down in the 5 minutes, why don't we just wait on the 15 minutes? That I said earlier that you're going to wait for just 30 minutes, just like what I showed you, I'm showing you now. If I go to the 5 minutes on this, look at it. If we had been on the 5 minutes, we would have taken this trade buy. Do you understand? Because this one closed above this one closed above it, and we'll buy it. But there's a tendency that if you buy this pair, it can drop now, hit you on your stop loss, because there's so many noise on 5 minutes. Let me show you another one. See this now. This is the 5 minutes candle. This one closed there, this one closed there for 5 minutes, and you decide to sell. It did not drop. It should go back and hit your stop loss. But if you go on a 15 minutes time frame, you see that this noise you are seeing here must have crossed above what the pivot level, and you'll be on the safe side not to enter that trade. But if you're on the 55 minutes candle, you may just enter the trade and it will not hit you on your stop loss. You have so many stop loss that will be hit. That's why I said instead of entering on 5 minutes, it's better we draw it on 15 minutes and we enter our trade on 15 minutes. Just like what we're doing here. We're waiting for this particular candle to close in 5 minutes time, then we'll take our decision to buy. Do you understand it now? Delhi, do you understand it? If you're still on the call. Every strategy is always good to do what? Modify it. Remember this rectangle strategy, we're doing it on 4 hours. And to even me, it's difficult sometimes to wait for 8 hours before you can enter a trade. Even if yes, it's very accurate, because entering on a higher time frame gives you more confidence. But it takes grace to wait for 8 hours to enter a trade. That's why I had to look for a solution on, okay, how can we do this thing and still be making money on it? That was what I was studying, and I noticed that if you draw it on 30 minutes or 15 minutes, you can go to 5 minutes and enter a trade. But I also noticed that 5 minutes have so much noise that you should be hitting your stop loss all the time. So it's better you draw it on your 15 minutes and you take the trade on your 15 minutes, which will still give you the same results. Now you can see that this one is actually still going up. We're still on the safe side. It might even close and go and hit the TP. But it's better to wait and be in the right side. Please, what's your advice for solution where we have a very long candle breaking the pivot level? Setting the SA at the bottom of the candle usually results to large loss because of the large candle. Please, what's your best way to trade? You leave it. If the risk is higher than the reward, leave it. Look for another opportunity. There are so many opportunities in the market. So you cannot, because of one trade. If the risk is higher, you leave it. You wait for another opportunity. like this one now. You know that we're going to take our TP on this pair. If this thing closes like this, there's no point you entering this trade because your stop loss will be what? Here, and your TP is just here. The risk to reward ratio doesn't make sense. But if you still want to enter it, good. Mommy, I'm already on the trade before this. But if you want to do 2 entries, one here and the other one here on this next pivot level, fine. But always check your risk to reward ratio. You're welcome, Dilly. It's always good to be truthful. It's not, you cannot enter all the trades. It's not compulsory. You must enter every opportunity you see. What you need to look out for when you're taking your trade is your risk. What am I willing to risk and what am I going to gain? So if the risk is higher than what I'm going to gain, you leave that pair or leave that trade and look for a better position. That's just it. You just like this. If I decided to put this one here, I'm risking $10 to gain $11. It doesn't make sense. I can't do that. That's why I placed it here on this pullback here. Then if I want to lose this trade, I'm losing $4.85 to gain $11.72, which is fair enough. So in all the indication that this guy is buying. So I think we should call it a night today. This is 1 hour 30 minutes. Okay, our gold is doing well. If you took the buy on gold, type yes on the chat box. This one already hit our stop loss and is going up. Okay, this one is still dancing on our entry. Only gold is actually doing it. And you're in profit. So if you're in profit, say yes, you're in profit. Only Kolawole took it. Are you in profit, Kolawole? You should be in profit. I went out at 723 and price is 726, which is 30 pips. Please, ma. Please. Yes, about 20 pips. Okay, good. Please, I have noticed that the market price on MetaTrader and TradingView differs. Is it just, no, it's broker. They're different brokers. So it differs. On TradingView, you have so many brokers. If I click on this XAUSD, have you seen Oando, IDC, Forex.com, Saco, Global Prime? There's so many brokers, so their prices differ. Is that understood? Oh, sorry. Do you know I wasn't even sharing my screen since so. I'm so sorry. I thought I paused the recording. I didn't know that I wasn't even sharing my screen. I'm so sorry. I had no idea. Okay. So this is 1032 and the buy for step index is valid. If you want to risk it, you can buy, but to me, I would advise you not to risk it at all. But if you want to risk it, you can put your TP up here and your stop loss below this because it's good to buy now. So you can buy it, put your TP where this TP is, which is 97.01. The buy is, you can risk it if you want to. It's now indicating that the buy is good. Stop loss would be 96.91. Take profit one will be 97.01, and the other one, if it breaks above and continue, 97.29. Volatility is going against me. You can see why I don't like it. The candles are just, it's going against me. All right, so thank you.